Hi, how's everybody doing? We talk a lot about different styles amongst traders. Everybody's comfortable a different way. Everybody learns a different way. A lot of people play different things, different time frames. Um, and if you today was one of those days that if you can, I guess option plays too. I know a couple option plays that made a lot of money today, but um, today was one of those days well suited for my style, right? Those of you who know me know I focus primarily. I'm an individual name type of guy, right? When the market is risk on, I like to build positions in individual names and swing trade them. When we get into a bear market or within a correction, I look for intraday opportunities. I play the overall market, but my bread and butter is individual names. And what we saw today was exactly what's been missing in this bear market. That's made this bear market that much more difficult to get through. Okay, we were talking about this in the late afternoon in the room. As far as I recall, and again, it's so long ago, but post 2000, when you had a lot of these internet and tech names, the deconstruction of these names, you know what I mean? When they took them down over that 3-year span, there were bear market rallies in these things that would make your head spin. We haven't seen anything like that. I've never seen names come down so significantly in a straight line, basically. And the reason why that's such a big deal, anything you try to short in this market at whatever point, bear market, bull market, whatever it may be, the market doesn't like to pay shorts. Okay, it's one of the most difficult things to do. And you look across the board from EV plays to SPAC names to Kathy growth names. You're talking about just an absolute demise, right? In a short amount of time. We're in this bear market a year, and these things are devastated. There's nothing left of them. So what we saw today take place in a lot of these names was a little glimpse of what you would normally see in a bear market. Okay, you would normally see in the bear market. A lot of people were oohing and ahhing over 30, 40% gains in certain names over a couple of weeks or a week. I'm telling you, I remember, and there were multiple times where there would be names up 100%, 80 to 100% in a day. And the reason being is they went from $3 to $6 or $5 to $10. And they were down from $300 off the highs. You know what I mean? So it's not that unusual to see. And for me, one of the ways I can wait out a bear market, right? Because when things get tricky, the trickier things get, the more tactical I want to be, right? Because the last thing I want to do in a bear market when I lack confidence and my signals aren't there, is hold much of any overnight risk. That's where all the risk lies. Okay. Reason being, you can't really manage it. You can't really manage that risk as much as you would, as much as you would normally like to. Okay. You walk in, there's news. Again, I'll give you an example. Back in the late 90s, 1998, you walk in, there was negative news out of Asia every night. You would see futures getting destroyed overnight, and your stop loss meant nothing, right? If you owned calls, they went to zero. So there's as much as you try, there's no way to manage your risk properly. Okay, the only way to do it is if you put into the option what you're willing to lose, but the reward is not there for that much of a risk, right? So it doesn't make sense. So the trickier things to get, the more tactical I like to be. And again, what's made this bear market so difficult to get through, there just hasn't been enough opportunity even on the tactical side, right? The squeezes just aren't, they haven't been worth it. And today, again, today was one of the, when I walk out with a headache and I'm dizzy because of the trading I did intraday, that's when it was a good day. And we saw a lot of that in most of the names you all know. Most of the names we made money with, in the height of the bull market, right? When things were bubblicious. A lot of those names, court action today, sweeper activity, some of those names got tattooed. And more importantly, I think, and the reason why I had a pretty decent day today, I think it was the setup. If it finally lined up the way it would need to line up for me to have a good day, okay? And what I mean by that is, sometimes you'll get these names, they'll already be in squeeze mode. Then they catch some sweeper activity, and now you're chasing an $8 stock up 2 or a $4 stock up $1, right? And there's not much follow through on top of that. The squeeze is there, usually it just fizzles out, right? You got to scalp them if you're lucky, and done. Today it started off nice and slow. Again, as far as I can recall, like one of the first few names they were buying was like Carvana. And it wasn't a gap up, right? Carvana didn't gap up. It was actually down. And as the action came in, you could see the momentum build, and then the action just never stopped. It never stopped. I mean, this is insane. Okay. Another name, RKT, right? So you guys, I'm sure you guys paid attention today, and you saw the price action in a lot of these things. So that was the main takeaway from today for me. We're going to talk some macro, okay? Because honestly, I don't think much has changed as far as what we've been talking about. And we'll touch on that. And we'll just talk about the setup going into the CPI today, how it played out, and what the future may hold over the short term anyway, because you can't look out that far. But this is where all the action was today. So now, going into tomorrow, what we would like to see, if you do play these names, and this is something you can take advantage of, you want to see the action spill over into some of the other laggards and extremely shorted issues. Okay, we started to see that in the afternoon. I played so many names today, I can't even tell you, okay, how many different names I was involved in today. But in the last hours, a lot of you know, as we were talking, I could have owned another 3, 4 of them. If I had, if we had a couple hours left in the day, I would have owned and held with a stop, probably another minimum 2, 3 names, right? Because we could see it start to, little by little, as the day progressed, we started to see it spill over into the other issues, right? It was almost, you get that feeling like what they're going to find next. And into the bell, like I give you an example, this guy, Lemonade. This thing has been shorted out the eyeballs, right? And reason being, okay, this here, and you got to go all the way back here, was probably the only bear market, legit bear market squeeze in the name, okay? If you got short anywhere in here, very realistically, you could have milked this thing all the way down, right? 1, 2 day pops, and then boom, roll right over. Look at this. Okay. So, and you can see today it was one of the names to catch action late in the day. So it didn't really participate in the squeeze full-fledged, right? You can't even this thing was up $1. You can't even see it on the chart. You can't even see it on the chart. So something like this here would be totally normal. Okay, totally normal, and not change anything, big picture within the company or the market. Right? It's just part of the bear market phase, part of the cycle. So, and this is what I'm talking about, what we're going to look forward to and see over tomorrow and then into next week. We got Monday off again, right? Another holiday, right? You got to be kidding me. Is Monday another holiday? I don't even know what day it is anymore because there's so many off days. Great, fantastic. So Monday's a holiday. So tomorrow, by the time we get back to work next week, we'll probably forget everything that went on today. Okay, with these freaking holidays. But anyway, what we want to see is if the sweeper activity spills over to the names. And the key is we want to see the sweeper activity confirmed. Why? Because we want to see that momentum build and for it to last, right? That's been the problem with these names. They squeeze intraday, right? Maybe you're up on them for a little bit and then they go dead, right? You see no sweepers, no flow, no nothing, and they just sit there and die, right? So we want to see the sweeper activity confirm that the shorts are getting nervous. And that's what it's telling us, okay? The shorts are concerned about the ton of profits they have in this name. They probably don't want to close out the position, okay, because they think it's going to zero. And all they're going to do is they're going to aggressively sweep calls without worrying about what they're paying for them, right? They're cheap, and hedge their short position. And that hedging, which is buying calls, is going to add to the momentum and the price action of the stock, right? So ideally what we would want to see tomorrow, even better, they open up dead. Maybe they're up a little bit off the open. They go red, right? Don't get killed. They go red and they go dead. And then all of a sudden in the afternoon, kind of what happened today, when everybody's now looking, boom, you see some sweeper activity start to attack these things. And again, you're going to see a lot of the winners from today, because they'll probably follow through, be the biggest winners. But the opportunities, if you're not in those names and already holding, the opportunity from here is going to be in the next phase of names that get squeezed out of this. And again, we forget how many there were. You know, that's what made this bubble. There's so many things that got hot, right, off of those COVID lows that, you know, had no business being around, you know, and that's what we're seeing. That's the cleansing we're seeing right now. All right, so that's what I'm doing anyway, going into tomorrow. And why I think that kind of is a perfect setup and opportunity for myself and us based on where we are right now, okay? One, we got earnings season here, okay? So automatically, without these squeeze names, what we want to look to is earnings weakness. We want to see buying into those names, and that's the opportunity we're looking for on the long side, okay? I'll give you an example. This is another name I played today, and this was my worst performing name because it's not one of these squeeze plays, okay? KB Homes, right? These home builders have been strong. KB Homes had earnings last night. I don't even know much about the earnings. They couldn't have been that bad. The stock was down a little bit, and considering that it had a nice rally off the lows, okay? So you had some weakness there. You can see off the open. Where is that? Oh, that's aftermarket here. Okay, and into the weakness, caught some nice call sweeper activity. Okay, also some put selling, right? $1 million, right? So those are the best opportunities as we go into earnings season. Okay, because earnings behind you, you don't have to worry about the earnings risk. If you like the name, especially if it comes in, and we may see that more this earnings season, because a lot of things have really firmed up over the last few weeks going into earnings. You got a lot of names that have been front running earnings in a sense. So I think we're going to see more of that opportunity going into this earnings season. Okay, and that applies to everything right now. Okay, at the point we're at in this bear market cycle, it applies to anything, meaning it doesn't even have to be an in favor name or outperforming name, right? A group that we actually want to own. It could be a name like this, okay? And it's down off earnings and they come in and sweep it, okay? Chances are, you know, a lot of the weakness could be factored in already, right? And you see some sort of bounce. I'm not saying that's the bottom in these names, but again, for trades, right? We've already seen it like this, for example, right? I think we were talking about this multiple times, okay? Snap, oh my God, they're going out of business, right? Gap down, some sweeper activity, and bing, 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 and look where she is now, right? So I'm talking about this, and even more so, right? If you don't want to take much risk in these names, if you don't want to hold them overnight, try to day trade them or flip them. Hold them one more day and you see some follow through. You don't see it, get the hell out, right? So it depends on your risk tolerance here. Okay, the names you probably want to look towards swinging are names that are not crowded and haven't been a part of the bubble. Okay, and that's where you're seeing some of the rotation into the industrials and stuff like that, where you're seeing some of the biggest winners of recent. Right here's a good example. FCX. Okay, I mean right now you got a nice little run here. Right, I don't know when they report. I think the end of this month somewhere. You get some selling off earnings, and you see sweepers buying that weakness. That's the spot you want to look for in a name like this. Okay, so that being said, that's the actual playbook for earnings for individual names. Okay, aside from whether we see any more squeeze action or not, that's a bonus. That's a cherry on top if we see further squeeze activity. Okay, and again, you hear I'm talking names, right? Because as far as the overall market's concerned, guys, I mean, we're at the point where anything can happen. Really, anything can happen. Okay. And what do I mean by anything can happen? This rally, which undoubtedly could extend from here. I think even better, if you guys remember what we were talking about off these lows, I think if we see stuff like this, right? We're back and fill with the negative noise that comes with a bear market. This can go on for quite some time. Hell, even, look to test this high here. And we totally be in a full-fledged bear market. Nothing changes. Okay? The risk in trying to hold for that at the index level is, I'll give you an example. If the wheels come off this earnings season, right? If you get some like real warnings, which they probably would have warned already, but some real misses from earnings that the street, is just not comfortable with, or whatever it is, economic news that really shits the bed. Things can change quick, right? Things can change quick. So you kind of got to wait through this choppy grind in a sense, okay, to at best maybe test 4,300, and one round of negative news can wipe it all out. Okay, so that's kind of the upside downside of where we're at right now. And on top of that, we have no edge as far as the overall market's concerned. Okay, again, what do I mean by that? Nobody's extremely short. Okay, this stuff they're short, you're seeing get squeezed right now. That's what they're really, really short. Okay, and my opinion, that's why they're being squeezed, because they really got aggressive in these tech NASDAQ names on the short side, and they're getting squeezed hard now. Okay, but overall, as a whole, there's nobody off sides here. Nobody off sides. Okay. And okay, so you can look at that, right? We spoke about this. You can look at that and say, well, nobody's short, right? Positioning's neutral. You're a bear. You can take that and turn it into bearish bias and say, well, they got room to add shorts back on. The problem is, okay, especially now, you got this soft landing theme circulating. You got the Fed may be done and probably is done circulating, okay? If that's the case, you're going to see this market continue to do this and find buyers, especially in pockets and names that we were seeing. Okay, because on the macro side here, right? And it's tough to make a statement like this because things change so quick. But if you guys remember what we were talking about into the end of the year last year, okay, we are at a point now. I don't want to call it a sweet spot because there's nothing really sweet about it, but we're in a spot where the recession everybody was worrying about is not showing up. Okay, the hard landing that even myself is concerned about, there are no signs of it. Okay, and the market is pricing in the Fed pretty much done as far as raising rates. Okay, and is looking for rate cuts come late spring, early summer. Okay, so the market is telling us that's when shit is likely to hit the fan. Okay, so you're talking about late spring, right? You remember we had this conversation in December. You got from now, right? December, January, February, March, April. You have that time in between where there's nothing really going on, and you can argue the bullish case just as much as the bearish case, and you're seeing that happen right now, right? People are calling for the soft landing because they're not seeing the economic data roll over, right? Just a couple of weeks ago, everybody was calling for a hard landing. We're just in that phase. We're in that spot right now. So I think that's the risk on the short side, getting aggressively short here, even though, we're positioning neutral. Okay. Again, what are the odds it gets to, up here per se? Honestly, I don't think they're that great, but there's a possibility, I think there's no rhyme or reason. I mean, let me kindergarten it for you, right? So we're kind of in this, right? Again, this is nothing new. This is what we've been talking about. Ooh. Okay, so think of this. We're in this, okay, until either something breaks in the economy, right? Whenever that may be, sooner, or the spring comes and the economic data starts to really roll over. Okay? Or for those of you who like to look at the glass half full, the Fed pulls off a miraculous soft landing. Okay, we're in this trading range because that's all we've been in, right? You guys notice that we're just in one range here. Everybody, including us, everybody is looking for the whoop or asking, is this the bottom? Is this the bottom? Is it right? But in reality, we're just in here, and the market is going to wear out one of the two sides in the interim. Okay, so what can we do here, right? It's easy to come to the conclusion to trade off the extremes, right? Again, that's something we've talked about. When we get down here and shorts and bears are getting really excited, you got a decent risk reward entry from there, right? Or here, okay? The problem is the market just don't go straight to the extremes. So what do you do throughout all this, right? And look where we are, right smack in the middle right now. What do you do? Right? You can't, it's tough to play the market beyond the intraday or short-term time frame. So that's why we're focusing on individual names right now. More than, more so than, I should say, that's why the playbook calls for what? Don't even. I just got a text message. What? Come on. Look at this. This was one of the stocks that caught the action late, right? Apron. What is it up? 32% in the post market. Look at this. All right, so that's why we're looking for opportunities in individual names. And like we've been talking about, we're going to see more opportunities. We're going to find more opportunities because we're going to get squeezes. We're going to get rotation leadership like we've been seeing, right? Up until now, there are stocks that look completely different than the market and look actually incredible, to be quite honest, So that's where we can find alpha. All right. And that's where we got to continue to focus. Right. Again, I know I'm kind of beating the old drum here, but just in case you guys, I need to reiterate it to remind you guys, that's the better place to focus right now. Want to see order flow being discussed in real time? I'm on a live broadcast during market hours every day where I call out the most actionable orders and point out important sentiment and positioning updates throughout the day. Go to wallstreetjesus.com/the Steamroom to apply for a 30-day trial and check out our community of traders. Okay, so hedge fund positioning in tech and growth, right? And you can see at the end of the year here how aggressive they got on the short side. Okay, and again, you probably don't even need to look at this chart. This is confirmation. You want to have that's what is beautiful about this day and age. You get that confirmation that when I got into the game, you never got that confirmation. You assumed, this is confirmation that they were leaning in on the short side in NASDAQ tech and growth. Okay. So again, the contrarian take from that, as most of you know, would be that they likely will be squeezed, right? And cover some shorts, and that will create upside. Okay. My opinion, that's what we're seeing across the board in NASDAQ tech. The more shorter they are, the more violent the move. Okay. What I found interesting is, look at this. This is what it looks like over the past, whatever it is, 2 weeks now that this has been going on, week and a half. Okay. So what you're looking at here, the red line is their short book, right? So as this means they're adding shorts. Okay. Look at this from late November to here. Okay. They're adding shorts, and we know it's primarily NASDAQ tech that they're shorting. At the same time, they're adding longs, okay, which energy, industrials, right? China, a lot of China issues, overseas issues they've been adding. Okay. So you guys just understand, like, this chart here, right, that we look at all the time. Nope, I didn't post it. I didn't post it. The hedge fund chart we look at all the time. Okay, it's neutral right now, right? Slightly long hedge funds as a whole. This pretty much is showing the same exact thing, right? Net, they're even, right? They're shorting and they're getting long. But we know from the Goldman update what they're shorting. That's the difference. And that's NASDAQ related tech and growth. Right? So you can see they're covering shorts there, NASDAQ, and a little profit taking on all the other stuff. That's what's been going on the last week or so. Make sense? Did I confuse you guys? Always in my head, it sounds a lot smoother and more understandable than when I relay it over to you guys. Okay, so overall, hedge funds are flat. They are starting to cover some of their NASDAQ shorts and take profit in some of the other stuff. All right, so I figured you guys find that interesting. Again, this is what the NASDAQ short looks like, okay? All right, let's talk macro overall market here because it's fascinating. Okay, financial conditions. You hear a lot of this. All right, when financial conditions when they're doing this, you can't make money in risk assets. It's almost impossible. Impossible. Okay? When they do this, good luck. Okay? So when you're behind the eight ball with the Fed tightening financial conditions because they've been too loose, okay, you look same thing like we were looking at in the overall the indexes, right? You look for those bear market rallies. Those bear market rallies usually will come when financial conditions ease. Okay. What's fascinating this go around is look at this. Right? And the market bottomed, but the market's not rallying as a whole as extreme as this. Pockets are, right? Industrials, anything overseas. I mean, they've gold miners. Okay. What I find interesting, and my takeaway from it is this, okay? I think we're at a point right now, and this doesn't have to be set in stone. Nothing's ever set in stone when you're in these type of conditions. But I think we're at a point now where the Fed is trying to move away from being a part of this bear market. Okay? What I mean by that is they would do, above and beyond in the past, when they've seen the financial conditions ease like this, they would make it their business to tighten them up again, right? This one was extreme. They threw a tantrum in Jackson Hole. Look, that's that red line, Jackson Hole. Okay? Here, where you hear from a couple of the Fed guys today. One is an uber hawk, Bullard. Okay. To me, they sound dovish, all considering. Okay. Dovish because they're less hawkish, not because they're dovish. Less hawkish. Okay. A lot less hawkish than I thought they would sound with financial conditions easing from here. Okay. And the reason could be very simply that they're at that point where they need to look around and see how much damage they cause, right? They're letting the fundamentals of the economy and earnings, okay, take over. That's what they're doing right now, okay? Because what's likely to happen, and think of it, it makes sense. If the fundamentals are going to deteriorate from here, and they should, okay, they should. Otherwise, inflation may flare up again. Okay, so if the fundamentals start to deteriorate from here, it's going to weigh on risk assets and financial conditions. Okay, financial conditions are going to tighten up as the economy deteriorates. So it's going to do the job, it's going to do the Fed's job for them. Okay, the more the fundamentals deteriorate, the more things are going to tighten up. So I think, again, this is just my opinion. I think the reason we're not seeing them pull this Jackson Hole yet is because what they're afraid of deep down inside, okay, is to continue to tighten, and then the fundamentals really start to roll over. That's when you get something that it breaks. Right? They're too tight and something breaks and they got a problem. Okay. So they kind of want to, they want to let what they've done have an impact and see what the damage is and assess from there. A lot of people think they overdid it already. Right? We haven't seen it. Okay. And what's interesting is, if you look, okay, and you know consensus is usually wrong. Not always wrong, but usually wrong. Okay? Every analyst I heard from, almost every analyst, every house, was looking for a weak start to the year, right? A weak first half where earnings deteriorate, we make new lows in the market, right? Things are bad early on, and then everybody was calling for a second half rally and a rebound, right? That's what, right? Mike Wilson, everybody, exactly. So what can very likely happen now, from what we're seeing now anyway, okay, is that maybe this year gets off to a decent start where it looks like a soft landing, right? It looks like the Fed's going to pull it off. It looks like the Fed is done. And then you get that recession second half, maybe even late second half. Yeah, Amar, and that's a great point. It doesn't matter, Amar. Pepper's brilliant. Wilson's great. And these guys are who they are because, they know what they're doing. But it doesn't, first of all, you're going to have wrong calls in this game no matter what. Okay, everybody does, even them. And two, like you said, they don't have a crystal ball. They don't know how this shit's going to play out. You know what I mean? They don't know. Nobody knows. Nobody knows. Anybody who tells you they do is full of shit. Nobody knows. Based off history, okay, you can say that based off history, it almost always ends the same way. And that's with something breaking and the Fed cutting rates and injecting liquidity. Okay, throughout history, it always ends that way. Now, the timing of that is more important than making that statement. Okay, because if you tell me that something's not going to break till the end of this year, there's a lot of money to be made on the long side early on this year. Right? You can't see, and that's what people think. They can just sit short thinking that they know how this is going to end, but it's a lot easier said than done because you're sitting through these things. You know what I mean? You're sitting through these things. So anyway, it's interesting how this all sets up. And with the Fed kind of, we could next week, or when's the Fed meeting? In 2 weeks, right? Maybe Powell surprises the world. I don't know how he's going to do that. Everyone is expecting a quarter, right? I mean, he can only sound so hawkish, but maybe he decides he sees something that he figures he needs to tighten financial conditions up. They got too loose. It's certainly possible. But in my opinion, the reason why February 1st, okay, interesting. The reason why I think it hasn't been done yet is because I think, and we've heard from the minute, the Fed wants to kind of get to the point where they want to see how much damage they already caused. Okay, they don't mind breaking something, but it could be already in the works. You know what I mean? It could be already in the works. All this tightening, it could already be at play. Especially if something happens. Nobody factors that in. We talked about it in the last webinar, okay? Nobody saw 9/11 coming. But if something like that, knock on wood it doesn't, but something like that happens in these type of conditions, right? The Fed could say all they want that they're not cutting rates. Their tune is going to change drastically if something like that happens. Pandemic, all that shit. That's why it can't be predicted. It can't be predicted. All right. All we look at, and so you guys know I'm not in the forecasting business. Okay. If I start to forecast and sound confident about it, run, don't walk, run away. Okay. What I'm saying is this: the market, okay, is the smartest forecasting mechanism out there. Okay. Right now, what the market is pricing in are rate cuts in the summer. Okay. That means if we're going to get rate cuts in the summer, things are going to look bad going into the summer. They're not going to be rate cuts with things looking great. Doesn't work that way. Okay? So come the summer, the market's pricing in that things are going to get ugly. Right? So we got early part of this year where we're in that, getting that sweet spot where we can try to make some money with individual names, and even the market when it gets at extremes, and we look to play a squeeze. But that's it. It's easier said than done, but it's that simple. It's that simple. Okay, we're not looking to hit the lotto in a bear market. We're like, again, I'll give you an example for me. Like, see, I'm being dead straight with you guys. Intraday, it hasn't been pleasant at all for me. I'm not going to sit here and lie to you and tell you I'm killing it day trading. Okay, I haven't. What usually it's looked like for me is most days are scratch days. I make a little bit of money or I lose a little bit of money. Okay, those are most days. And then one of a couple of things happen. Either I catch a day like today where the squeeze names line up and I hit them nice and hard and I have a really good day. Okay, or the market gets to an extreme, I get a little more aggressive, and that's where I make the money. You understand? But that's my survival kit. I'm not, you know what I mean? I'm not asking for anything more than that in this environment, because I want my head attached when this comes to an end. It took the Fed 18 months to break it, going to take at least 7 months historically to fix it. Yeah. I mean, it's, again, there's no, if we could slap dates on it, Matt, I would love that. You know what I mean? Time frames and stuff. Every cycle's different. We don't know what's going to break. You know what I mean? We don't know. Yeah, me either. I mean, we got to be realist here. We don't know what's going to break. Is it in this country? Is it overseas? You understand? Is it something systemic? Right? Is it we don't know any of this shit. So you have a roadmap, and that's from experience. You're gonna figure that out, right? That's like the playbook, the roadmap. That's going through this stuff in prior cycles. You're gonna have a playbook to get you through some of the tougher times. You got to stick to it. Wait, be patient. Wait for certain things to line up that you can make some money off of, and then the rest. I mean, you just got to hang around. You just got to hang around. All right, but that's simply put, that's the playbook. That's the playbook right now. And to be quite honest, I've been really conservative. I know, some of you and some of, people I know who have been a lot more aggressive recently in individual names, and they've had a good couple months. I mean, it hasn't been, the first 3 quarters of this bear market has been abysmal, but it's been a lot better the last couple of months in individual names. Yeah, I still have not held anything overnight, Pete. Anything. Not a thing overnight yet. I was tempted. I was close. I'm not going to lie to you. Close a couple times, starting a position. But there was always something there that it wasn't worth it for me. I didn't have the edge or positioning, or I felt the market would probably still come in a bit more, so I didn't want to be sitting in a name for no reason. But I'm not going to lie to you. I've been tempted, and I'm kicking myself in the rear end in a couple of spots. The gold miners, I wanted to get long yeffing gold miners. Nothing crazy. You know what I mean? I didn't want to go nuts, but I wanted to have some long exposure, with some time. I told you guys for 2023, in the miners, the flow was there confirming it. But I don't have any. I know some of you have them. You know what I mean? The energy names, I missed the boat completely there. So I missed opportunities, but it doesn't bother me. It would bother me more, again, if we were in normal market conditions Yeah, that's a lot of mark, a lot of exactly, and I'm not just going to chase in this environment. But I'm just making the point to Trey that I've definitely been tempted, and as you guys know, for most of this bear market last year, the temptation just wasn't there. There was just I had no interest in anything. You know what I mean? But off these lows, even before these lows, there have been a lot of things that look interesting. No, the gold miners. They were literally all of them. These guys. Hold on. AEM. This one, GOLD, Barrick. Oh, you were switching subjects. My bad. So you have gold miners that have been moving. Put it this way, T. Over the last month, okay, there's been a lot more moving than I even thought we were going to see. Like you got, you see some of these industrial names, Caterpillar, URI. Look at this, all new highs. China, look at this. I mean, you're talking about monster moves, monster. And I day traded IQ. I day traded a couple times this IQ in this rip. So yeah, I've got a million China names. This PDD is another China name. They're just, and you guys know I like these as a longer term lotto. Exactly. EDU and Tau. So there's a lot of things. Dada, I played intraday. A lot of things that oh my God. A lot of things that look interesting, I'm a little piker. And I want to, I think I mentioned this to you, T. I don't know if I mentioned it if you were around, but personally, and this is just for me, I want to start playing more. Okay? Even if I don't have the conviction, I want to start swinging small positions because what I'm worried about, this is the longest I've gone, okay, without swinging individual names. And I'm worried when the time comes that I need to get aggressive, I'm going to be so gun shy because I haven't done it. You understand? It's not easy to switch on off like that. Exactly. Just swing small position, if it's a loss, whatever, even if it's a winner, you're not going to get too excited about, but at least it's like getting into the batting cage and swinging. Stay loose. Exactly. Because that's a serious problem I had to deal with a lot, being too gun shy. You're so used to being in cash because it's saved you money. You understand? Being in cash was the right thing to do because every time you looked to click the buy button, it would have cost you money, right? And you got so used to sitting in cash and thinking it was the right thing to do that when it was time to start to get aggressive and build position in names, then it just didn't come easy. Now, honestly, it depends. I'm not going to say definitely not, but more than likely, the names that I'm going to be swinging and building position in are not going to be the leaders of old. Okay, that's because that's one of the things, are major things on my checklist that determine whether we're in a new bull market or just a trading range. You understand? Like again, this market, okay, can rally to wherever it wants and still be in, it may not be in a technical bear market, but most stocks will be in a bear market. Most of the old leaders will be in a bear market. Okay, so it won't be the start of a new bull market, but we could easily trade in a range and then make new lows 6 months out. What I'm waiting for, okay, is what I showed you guys coming out of 2000, the bubble, okay? And before the market, the indexes bottomed, we went over this. Before the indexes bottomed, you started to see the new leadership take hold. Okay, so the indexes continued to make new lows, but there were new names catching action and outperforming. Okay, so 9/11, even though it wasn't the bottom, that's where under the hood, a lot of things bottomed. New leaders. All right, so what happens is that's where I want to start finding those names and start swing trading. The likelihood is they're going to be new names, okay, and it's going to be the new leadership of the new bull market. And then when this comes, you know what I mean? Those things are, again, they're going to be the new leaders and be up the most. You understand? But then this is where you throw a dart and make money, right? That's the start of a new bull market right there, okay? So, like, my point being, we could be in something like this, okay? And this is not the start of a new bull market, right? But there'll be stocks that outperform and you can make money that hold up. You know, this is the new bull market. Hold on, I gotta make this bigger. Are you? Oh, you're talking about Jay? If I understood correctly, that you're trying to get the new leader in the new bull market, right? Yes, yes. So the point, I mean, I didn't answer your question. I started talking about my own shit. The point is, in all likelihood, AJ, they're not going to be names that look like this. They're not going to be hockey sticks. You know what I mean? They're not going to be hockey sticks. They're going to be, again, I don't think we're seeing that new leadership type action yet. You know, and it can all look different, right? Like we were talking about, the China names can possibly lead all of 2023. You know, very easily. AMKR, that's a good example. You know what I mean? So something, a newer name nobody knows about. And so this AMKR could be the next NVIDIA, and we don't even know it. You know what I mean? We may not even notice that it is the next NVIDIA till the year 2024. You understand? But it could be already in the works. Yeah, so, right, those were a couple names that caught action, right? We're seeing more action, man, too. You know, very selective stock picking. Very selective stock picking. You know, and the other thing, too, and this is, I know I don't like it either because, you know, that's where all the sexy stories come from. More than likely, it's not going to be tech, guys. Okay? It's possible. It could be pockets of tech. You know what I mean? But more than likely, it's not going to be tech that's a leader. At least early on, anyway. You know, at least early on. It doesn't mean you can't make money in tech. It's just, it's gonna be harder. It's gonna be more difficult. But we've seen a couple of tech names, right? That I'm not even talking about just one buyer, multiple buyers, right? This Flex, T. How many times we talk about this Flex, T, right? What's up, Bonnie? But for shit sure, it's not going to be, oh, yeah, I saw this thing. Hey, is that the name I'm thinking of? Let me see. It's not going to be Riot or, oh, yeah. You want to know the names I played today? Okay, go figure this game. I'm talking about new leadership, quality growth names, right? That whole story. And today I had, that's another good name. And today I had, it might be my best day of this bear market, intraday, all shit aside, okay? And you want to know what I played? I mean, you're talking about the shit of the shit, okay? I played this today. What? Wait, I don't even know the freaking symbol. Is this? No. What's that symbol? You guys know it. That D, is that it? Like, I don't even know the symbol. No. B, T, that's it. That's not what I typed. Look at the stock I played. Okay? Look. But see, look, this is, I love it. I love it for what I'm looking for in this environment. Okay? This thing is complete death. Death, right? Complete death. Okay? Now, again, think about what I'm doing. I'm day trading. Okay? I'm not loading up calls and going to hold it for 3 months. All right? So what happens, they come in, they're already hitting all these squeeze names. Okay? They come in, and let me show you a minute chart because that's how quick. They come in and they tattoo this, right? They take out offers. Okay? It does this. Bink. It was up like 16 cents off the buying. Okay? And that's exactly where I got in. Okay? Went up a little bit higher, hung out here, and then all of a sudden, more sweepers came. And this thing went, look at this. Okay? So it went from $1.40 to 3. I didn't hold it to 3. God, no, I didn't hold it to 3. But I give myself credit. I got lucky, but I give myself credit anyhow. I milked Carvana today. I milked it. I literally held it from where it first started catching action. And you guys know, I told you guys in the steam room when they stopped me out. I raised the stop the whole way. Right here. They shook me out. Yeah, equity. I bought equity, all these things. I'm telling you, first of all, I fat fingered Carvana by accident. I got lucky. I bought it instead of sold it, so it ended up benefiting me. But it was not good today what I was doing. You know, I got help, but I got guys trading with me for the very reason of what happened today, because it gets too hectic. I start hitting buttons and it's a disaster. You know, I can make a mess out of things. But yeah, just giving you an example of the names I played. Oh, you want to know another name I scalped today, T? And I was sick to my stomach. I don't know why I just didn't hold it. What was I scared of? I don't know. What did they make? Beer honey? Hive? You fat fingered something too? I'm telling you, on days like today, it happens too often. You know, same thing, this thing. It just went up in a straight line. You know what I mean? Like, it's a beautiful thing when you're in it and it just goes like this. Because you raise a stop and you can milk it. You know, and I told you, I played this late day. Honestly, if it was earlier in the day, I would have held this thing. This name, I would have stayed loose on it. I would have given up shorter term profits. I would have said, if I get stopped out, break even, whatever. But I would have tried to milk this because of the short position in this thing, you know. But the bell, I ran into the bell. Look at it. You can't even see it on here. Look at it. You know what I mean? From death. So that it just lined up perfectly today for me. Like this is the spot. You guys know. I like to buy death, and then my edge is sweepers are tipping me off to a squeeze. But this was in the works even before today. You guys made the best call. You don't even realize it. Who was talking to me? A couple of you guys were talking to me about this thing. WBD. You remember? What was that? I think it was maybe a week or two ago. You guys remember we were talking about this? They got an investor day. Look at this. Straight line rip. Oh, you see you? See what I mean? I mean, that's a score right there. Look at that. Jesus. So it started already, you know? So let's see, maybe, maybe this whole soft landing, easing of financial conditions, and I'm not even talking about the crap of the crap, maybe some growthier names that have been out of favor for so long get squeezed, and we can make some money in these things. Yeah, it started exactly right after the new year. Exactly. But ultimately, it's going to go back to the way it was, right? Here's another name, T, that I was tempted. The spot I wasn't crazy about. I think I mentioned this one to you, EMR. The flow, the action it caught was unbelievable. Like, you can't ask for better looking sweeper activity. The name, talk about quality, it doesn't get better than this. They did $5 billion for the quarter. They earned $1.53 for the quarter. You talk about a real name. Yeah, see, some people like this setup. Some people like this setup. I don't know. Because of this, it turns me off because I feel like it needs to come in before I could get interested. But in my opinion, I could be wrong. It's showing you the strength that there's no selling in it. Kind of like Cat. Look at Caterpillar. Right? Look. See that? No sellers. Okay? Look at this. How overextended this was. Now this should come in. Nope. And then right out. Yeah, exactly, Mark. But you know what it is, Mark? Me, maybe not you. The time is almost worse than even it pulling back. Me sitting there and knowing that I got to sit through the consolidation. You understand? I don't know. It drives me nuts sometimes. It's almost like I'm waiting for it to pull back, thinking it's going to pull back, and it just keeps going sideways. And I feel like the upside can't come yet. But again, it's just like people, some people love this pattern. Like a buddy of mine loves this. He loves this. What he looks at it like this. This thing's ready to break. You know what I mean? Yeah, exactly. That's the type of players they are, right? They're looking for that breakout. Exactly. Buy and then add if it starts to break, right? See, I'm just, it's a preference thing. I'm just not comfortable. That's the right way to do it. Yeah, this EMR is a stud. It's a stud. It's an absolute stud. So that was one of the names. Somebody else mentioned the name similar. Let me see. I got to scroll up, I think. Oh, the energy names. Every time I think they're dead, you know what I mean? Every time I think, all right, there are a couple new energy names catching flow, but, crude looks a little shaky. Maybe it's late in the cycle. These things just keep putting along. This BKR, right? Nice action. You got consolidation, not as big of a rip as the EMR, so maybe less consolidation, And would it shock you this thing is up at $40? Wouldn't shock me one bit. Even exactly. You guys just called. I was just going to talk about that. How? Oh wait, this an astronaut company comes on every time I hit this. Halliburton. All right. They were buying in this consolidation. That got out. And the slob. You see the slob getting out? Boom. Right there. Consolidation. Bink. Oh, yeah. YPF. They lit that up again today. Look at this. This is a Latin American energy name. By the way, Dow Chemical? Dow Chemical. Oh, yeah, it got hot here. Wow. Oh, that's what you were talking about before, that the chemical names are heating up? Yeah, look at this thing. And you know what's crazy? This has been telling us that the recession's not coming right now. You know what I mean? These names wouldn't be doing this if the recession was coming. They wouldn't be doing this. One more interesting point I wanted to tell you guys before I forget. Remember how we were talking about that our market, we haven't seen that capitulation, but Europe saw capitulation, China saw capitulation. You see what's going on? You see the outperformance right now? Like Europe was supposed to be on fire right now, right? Like think about that. The brutal winter's coming. It shook everybody out. Everybody and their mother, they had 40 weeks of outflow. 40. We can't get 2 in a row. They had 40 straight weeks of outflows. Capitulation. And look at the DAX. Look at this. Like this was in the heart of the trouble, right? Germany was going to blow up. Amazing. And, you know, so you look at Europe and you look at China, which same thing. They had that capitulation and outperforming. So I think that's the weird element here that none of us have experienced. Even myself, I did nowhere near used to this. Okay. Usually we lead. You understand? Usually we lead. Like in 98, that correction, Japan had headaches and then we let out, we held up. What's going on now is money is going overseas, right? They're leading. Our markets are lagging right now. And the names that have global exposure, those are the ones that are doing well, right? Nobody saw that coming. I'm sorry, nobody saw that coming. Not after the Ukraine, Russia shit. Nobody saw that coming, right? Look at this. Okay, look at this, and then look at some of these markets. Look at the DAX compared to that. Craziness. Wall of worry, exactly. The reason likely because of 2021. I don't know, Ani. Is that what you think? Honestly, I mean, listen. My answer to that question, Ani, is going to be very simply that it was so one-sided in the other way that I think it's just the cycle has turned, you know? In other words, for ages, if you look at some of the charts, you've seen them, I retweeted them on my regular Twitter, you know, money has been leaving Europe and more recently China, Asia, and coming here. And now it's going in the other direction. You know? And T, this is all what did Hartnett call for? Right? Was that called money? That's what he called for. T. What about this, T? Right? Dollar short, long China, long emerging markets, long gold, long copper. Where's his things? I have them here. Look. Oh, his note comes out tonight. I can't believe it's Thursday already. Our lives are just flashing by us. Right? And we got a day off again Monday. God bless America. Any excuse to sit on the couch and not work. Oh, here it is. So here is the Hartnett trades. Yep, right here. Long treasuries, short dollar, long emerging markets, long China, long gold and copper, That was a great call. Short US tech, short US private equity. How about this call? I give Sil credit. He played this. Silver, you guys know, in the room. Long EU banks. That's this ETF right here. EUFN. Look at this. Yep. I mean, excuse my French. It was a ballsy trade. I mean, come on. And that's how you know it was probably a decent bet, right? It was not easy to see the light. I mean, this is a huge rip. Huge rip. So I'll tell you where I was definitely wrong recently here. I'm talking about over the last week or so, and why, honestly, I didn't even think we'd see this in the market, this run here. I thought it would be more chop, if not weakness, because what I thought was going to happen, I thought money was going to come out of the stuff that it's been going into. I thought they were going to start taking a little profit in Caterpillar. You understand? And the industrials and China, and rotate into the NASDAQ shorted stuff. You know, that's what I thought we were going to see over the short term. And for the indexes, you know, you can't really be bullish the indexes if that happens. Instead, they haven't sold these things. Look. They don't want to sell them. You're going to watch this FCX off earnings. You know, they might give you a gift of a pullback. Yeah, a little bit of selling, right? I thought they were going to, you know, roll over a bit, and boom, they bought it right back up. They bought it right back up. So I was completely wrong there. Completely wrong. You know, completely wrong. Especially too, the CPI coming in line. I thought, you know, it'd move money to more than NASDAQ, right? Rates, the end of the rate hikes. Just an excuse to even the rotation out a bit. But yeah, they don't want to sell. Some things have seen a little selling, but not the leaders, not like this. Yeah. Definitely. But, you know, buyers just came in. They wanted to. There's so much. You know what it is? There's a lot of money on the sidelines on the pro side. Here, you want to know like the mentality of managing money right now? I took it out of the McElliott, because sometimes you read McElliott and you don't know what the hell you read. But if you read yesterday's McElliott, this is exactly what's going on right now, and why they have to buy. Where is it? Yeah. There's better global economic growth than expected dynamic occurring in real time risks a scenario where the highly anticipated consensus equities earning recession narrative has been mistimed again, by the way, too early, setting up a better than feared earnings season. And looking at early feedback from the start of year sector conferences, we already are hearing confirmation of said better than feared theme for top line earnings and dour sentiment expectations. And this right here. And with so much fresh capital to deploy after such an epic banner performance year in the macro space due to clear trend trades in 22, and paired with, these sentences keep going on, right? And paired with clean P&L on the turn into 2023, funds are moving faster to grab risk-on expressions and unwind risk-off positioning in order to not start the year in a hole. Yeah, so they just they have so much money on the sidelines, because again, like everything we talked about, them worrying about earnings falling off a cliff, the recession. We're talking about the pros here. They have so much money on the sidelines that they want to put some money to work, at least a little bit of money to work, so they're not left behind. Yeah, I'm telling you, it's not, and listen, I think that's probably the biggest takeaway from what we've experienced up till now. It's been primarily tech growth and speculative stuff, right? Like that's where all the pain and all the beating has been. Yep, exactly, right. And again, we can't look at it through our point of view because you manage your own account. You don't have to answer to anyone. You miss an opportunity, you miss an opportunity. You want to be conservative? You don't have to answer to anybody. When you have clients, you can't sing that tune. You understand? When clients are hearing soft landing rhetoric and things aren't that bad and they think a bottom's in, and you go to them and say, no, we're still short and risk off, and they can't sit like that forever. Yeah, exactly. You come in the next morning, the account's gone. So you got to feed them something. Even if you put a little money to work, you got to give them a little risk. So that's kind of what we've been seeing here. But anyway, the moral of the story is this year, even if it does get bad, whenever, next month, later in the year, I think for us, the way we look at this market, there are going to be more opportunities this year than last year. Again, whether it's tactical squeezes and names that are probably going to zero at some point, or rotation, underbelly, potentially new leaders, China names, you know what I mean? There are going to be pockets that outperform a lot during this year, a lot. There are going to be periods where everything is correlated too, but that's going to set up the opportunity, I'm telling you, right? So when you go through something like this, it's going to set up, that's where it's all going to start. That's where all the winners we're looking at, a lot of them started from here, right? The big winners anyway. But look at airlines. Anybody trade these things? Ani, do you play the airlines? Did you mention you play the airlines? I tell you, I don't play the only airline I ever played is UAL once in a while. AAL. Yep, this one. Look at this rip. What the hell is this? I can't believe it. This looked interesting. Royal Caribbean. Look at this. It's unbelievable, the moves, right, Max? Unbelievable. Yeah, the airline, and look what just happened with the airlines, right? People were stuck in airports. They never even got to where they were going. Amazing. You're so right, Ani. You're so right. It's not worth the risk, right? Of holding or looking 6 months out. It's not worth it. It's more harm than good, right? It's more harm than good. You try to just wait, be patient, and wait for pockets of this wherever they show up to try and take advantage of it. They're not always going to be around, but when they show up, you take advantage of it. You're right. Because you can't predict shit in this type of environment. So unpredictable. And wait till things start popping up out of nowhere. They always do, and that's why, you know, people think you put your conspiracy theorist hat on. You know, people think this is all orchestrated. It all comes in cycles, you know, all the bad. But Ani's right. You can be tactical, survive, and make a little bit of money. You don't have to be greedy right now. You know what's funny? Praveen, I forgot. I swear to God, I thought of you today because I was asking and nobody could remember. I said, I guarantee you Praveen remembers exactly what he paid. That buyer, right? So they went they went down to a nickel. Those calls went down to a nickel and now are up to 5.5. Unbelievable. Yeah, they're in open interest. And, you know, there's been action in the airline, but if I remember correctly, this was on the top bet list too, right, Praveen? It was a good looking action. Oh, he wrote it, 2 million. It was $2 million. Yep. Damn. That's crazy, right? Nickel. That's options, can drive you nuts. Yeah, you just, you know, if you have, well, you know what I want to ask you, Praveen? I don't know if you posted it. What month? What was the strike? It had to have some time if I put it on the top bet list, right? Or no? Well, these were back late last year, so. No, what was the strike? Oh, they were Jans. Jesus Christ. Wow, so they got bailed out here. I thought they were like March or something. Oh my God. Can you imagine? Got a horseshoe up his ass. Jans. Oh God. That's a great feeling though. They got bailed out by the FAA. Unreal. All right, boys and girls. I'll let you go relax. Get some rest just in case they come in tomorrow looking to squeeze everything again. All right. Have the Advil ready. Get ready to go. And I'll see you guys mañana. Yep. Have a good rest of the day, everybody.